Popular funds destroying your pension. Let's look at Legal & General Global Emerging Markets Index Fund. It's an index fund. We're told to go into index funds. Emerging markets, they sound exciting. So how's it done over the last 3 years? Oh, I bet it's been done really well, emerging markets. I know the Nasdaq was up 55% in 2023 and the S&P 500 was up 25% in 2023, but I bet this one's done really, really well. Okay. How's it done over the last 3 years? Oh, wait a minute. No, those numbers don't make sense. That can't be right. Oh, okay. The fund is down 5.3%, but I bet the benchmark against which no, that's down actually minus 3%. Okay, so this is pretty bad. Maybe it's the companies. Taiwan Semiconductor actually isn't bad. It's just that they bought little of it and they bought a load of other stuff which didn't quite work out. The Indian company is not too bad. Look at this. I mean, after the first 6 or 7 holdings, you're less than 0.1%. Basically, spray and pray. So what's a better approach? What I might suggest is, what if you had in your hands, in your control, 10,000 equities and you were told you need to tick these boxes all green. If they're not all green, you don't get in. And what is it? You're ticking value, growth, income. So you're not just saying, oh, I'll only go for value companies or just for growth companies. Croaky, invented by Deutsche Bank, used by Goldman Sachs Wealth Management. Companies in the top quartile as a basket generally produce 30% per annum returns on their stock prices. Not every stock, not every year, but on average over a long period of time. Comes from their quantum division. I stole that research. Momentum. Sortino, you want that to be above 1, but above 0.3 will give me a tick. And Alpha, and you can see there's very few companies out of 10,000 that do it. That's why stock selection's pretty difficult. Okay, it's why I've written 18 books on it. And by the way, all of this, 3 people I need to thank who I've written about in my Financial Times columns and who all went on to win the Nobel Prize in Economics: Richard Thaler, Daniel Kahneman, and Eugene Fama. Well, and Goldman Sachs, as I've mentioned, Wealth Management, and Deutsche Bank, who I mentioned. The momentum stuff, AHL, one of the largest hedge funds in the world, and I'll say Citigroup's research on that as well. I'd rather do it this way. You know why? Well, for a start, it works.